Hello there, this is James and you're watching Tixee Live. In fact, you're watching Tixee Live from the home. Now, the reason why I'm watching at home, I'm a little bit under the weather today, but either way, the show must go on, as always. And today I want to talk about an event which we talked about a little bit yesterday and Friday, which, you know, one of the topics we discussed over the last couple of days, because the market over the last couple of trading sessions have been fairly bullish. We've had a weaker dollar, and we did say there was a certain event coming up which could change that mindset. And this is what I really want to have a brief conversation about. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So indeed, it was the big one. It was the big one, right? And we did talk about this yesterday. I did say, obviously, we had the euro was on a bounce, was recovering, was way above parity. You had the sterling actually above the 117 handle. You had the Japanese yen fighting back against the dollar. And I did say there was an event coming up which could completely change that mindset. And it did come out, and it has changed that mindset. And that, of course, was the US CPI, which came in hotter than expected at 8.3% versus the expectation of 8.1%. Yes, indeed, it is lower than the previous reading of 8.5, but it's not a dramatic enough drop which the market was anticipating. The market was anticipating, to be fair. We'll get soft data. We can actually see the Fed's involvement, what the Fed has been doing, actually having the impact on inflation, but it's not having the dramatic impact that they were hoping it would. And as well as that, core CPI, that came in at 6.3% versus 6.1% expected. Now, for those of you who are new to trading, don't forget core doesn't include energy or food. Energy or food. It includes just basically the cost of the stuff we generally buy to carry on and to live. Other items like clothing, for example. And here's the thing. It was expected to come in at 6.1%. It came in higher at 6.3%. The previous reading was 5.9%. So there's an increase in core. So what the market was really hoping for was a clear indication that inflation has hit its peak, and it hasn't. And if I go back to the core US CPI year on year, it does include energy, does include food. Don't forget, we've had lower oil prices, close to where we started off at the beginning of the year, and it's making no real massive dramatic impact. So, like I said, this all build up and this whole sort of bullish attitude to this, before this event, they really expected it to come in lower. But like I said yesterday, this potentially could be a real game changer. It can change the market's mindset, and it has. We are seeing currently stronger dollar again, and then risk of appetite again. Because what the market was really hoping for, what it was hoping that with this reading, that the Fed will be gentle with them, will be gentle. What they were anticipating. Okay, next, 21st, next week, the general consensus is the Fed will be aggressive and will raise rates by 75 basic points. That's what they're expecting. Not 90, because that'd be really scary. 75 basic points. But they were hoping, if they did get weak, softer, an inflation reading, maybe come November, the Fed would be more gentle and only do 50. But now with this hotter than anticipated reading, that's slowly dispersed that feeling, that optimism is slowly dispersed. And there's another couple of things, and I said this yesterday and on Friday when we were seeing the dollar weakening. There's other factors as well, which the market is ignoring a little bit. They're ignoring it really at the moment. And I want to just talk about three currency pairs and why I think the market has failed to take into account these factors, which is not so good for them. Is why we could potentially see stronger dollar again. And well, we are seeing stronger dollar again on the back of the CPI reading, but stronger dollar even longer. Let's start off with the sterling, for example. Now the UK had some unemployment data come in. Okay, and first of all, we had UK unemployment, and it was announced. It came in at the lowest level since 1974. Okay, it actually was announced at 3.6 versus 3.8% expected. But here's the thing. The number of people who are actually in the working environment in the UK is dropping off due to retirement, illness, things of this nature. The COVID lockdowns has changed an awful lot of mentalities. So that has also got to be played into a factor with unemployment. And here's another worrying thing. Though this is, okay, on paper, 3.6%, lowest since 1974. Great news. But there's other factors, other job data came in, which was not so positive. For example, job growth is slowing down in the UK. New jobs created was only 40,000 versus 120,000 expected. And what's more worrying was this next figure, which came in for the UK, and that's claimant count. Now, claimant count is the UK's equivalent of US initial claims. Now, the US initial claims and claimant count are the number of people who sign on for unemployment benefit for the first time. Okay, for the first time. Now, the UK does it the other way around from the US. They do it as a negative number, as in less people signing on. And the US does it as the overall number of people signing on. So it gets a little bit, gets a bit confusing, but they do it as a negative. Now, and don't forget, like the US initial claims, I've talked about this in previous videos I've done. I always think that US unemployment or claimant count and US initial claims is like an early warning signal for things to come. Okay, it's like a lagging indicator. Now, the claimant count came in, or announced today, at plus 63,000 people signing on for unemployment benefit for the first time, as opposed to the expectation of negative 13,200 people. So really, you're looking, okay, it's only 6,300 change, you're saying. But really, what you're looking at with that number actually should read 19,500, if my maths are correct. I'm thinking a bit poorly, so my mind might not be quite there. But 19,000 people signed on for unemployment benefit for the first time. Not a good sign. And as well as that, don't forget, we've got a very key data coming into the UK tomorrow, which is UK CPI. Expectation is for it to come in at 10.2%. 10.2%. Don't forget, the Bank of England expected to go to 13.4% or around that number by October. That is frightening. And here's another thing. The UK has a bank holiday on the 19th, not for happy reasons. Unfortunately, it's the Queen's funeral, but we have a bank holiday on the 19th. And don't forget the implications of the bank holidays the UK had back in June for the Queen's Jubilee seriously damaged the UK's GDP. So with another bank holiday coming up, again, like I say, not for a celebration this time, for more sorrowful reasons, there is fear the UK could fall into recession sooner than later. So again, this is playing back against the sterling. So what people haven't taken into account over the last couple of sessions, they're clearly hoping for a lower inflation reading. They're not looking at the general core aspects of our currency at the moment, things and factors which should be taken into place. Let's move on to the euro. Okay, the euro again was boosted a little bit by obviously ECB's interest rate decision of raising its 75 basic points, which was an unexpected mood. And like I said previously, if you had told me they were going to do this several months ago, I would have said you're pulling my leg. But they did it unexpectedly. They did it, and we have had a bit of a boost. We've had some more hawkish comments. The other thing the Eurobulls are thinking about is the worst has happened. The worst case scenario has happened. What we were worried about was Russia cutting off the taps. Now they've done it. How bad can it get? We knew this, we were worried about this in the first place, but it can get worse. It can get worse. Don't forget, last week I did a video on the CEO, I think it was Uniper, which was Germany's biggest energy distributor. And the CEO was raging, screaming out, saying, look, this is going to get worse. Worse is still to come. And the fact he was sort of basically saying to, he's trying to scream to policymakers, government officials to say, look, we need to get together because we are not out of the woods. I know that we were worried about this. Now it's happened. How bad can it get? It can get worse. This is what he's saying. So this is clearly having an impact as well. This is what we always should be paying attention to, not ignoring it purely because we're hoping for better US CPI. And again, of course, yes, the ECB's finally pulled the trigger and joined the 75 basis point rate hike club. At last, they've done it. But is it a little too late? Have they taken their time too long for action? And that as well. Moving on to the yen, and another currency pair which has benefited greatly against the dollar over the last couple of trading sessions, not favoring too well now. And as I said yesterday, it was boosted by talk from the Bank of Japan and by other key members saying, we're not ruling off any options about getting in and intervening. But again, this is just talk. Unless they do actual proper intervention and actually change Bank of Japan's policy, then what changes? So that's another factor as well to bear in mind. Up next is US retail sales, of course, which is due tomorrow. But all this is building up to the 21st of September, which is next week, about the Fed, when, again, we are anticipating a 75 basis point rate hike. But now after this US CPI data, the hope was only 50 in November. That is slowly disappearing. Events to come for the rest of this week. Of course, we got UK CPI tomorrow, like I said, 10.2%. US retail sales, UK retail sales, US midstream consumer sentiment, and of course, EU CPI, which is on Friday, and I will be doing a watch along for that event. The market, as it currently stands, euro dollar, like I say, now it was way above parity a couple of trading sessions ago, now way below that. Currently trading just above parity, 1.0022. Sterling was above the 117 handle, not now. Currently trading around 1.1544. Dollar yen was trading around 142, not anymore. Now trading at 144.19. In fact, Rabobank has recently come out and said they see the 150 level in range for this pair. Gold was challenging 1,728 level. In fact, was trading just above it, not now. Currently trading $1,715.26. S&P 500 trying to push forward higher, not now. Currently trading around 4,003 points. So yeah, everything has completely changed. Okay, like I say, once again, this is a very unorthodox entry because, like I said, I haven't been particularly well today. That's why I'm doing it from home. But like I said, the show must go on, and I really wanted to talk about this, because I think this is a key thing to talk about. But I'll be back in the studio again tomorrow. Don't forget that. And tomorrow I'll be online again at 8 a.m. UTC to see, we discuss the aftermath of this event and see how the US session has carried this on. Then back on again at 5 p.m. UTC to cover the US session. And then tomorrow I will be doing my next episode of hashtag Ask James at 12:30 p.m. UTC. This week's topic, fundamental analysis, something we talked a little bit about today. Again, so anyway, like I said, thank you for watching. I know it's pretty unorthodox today, but never mind. I'm back in the studio as normal tomorrow. Don't forget, you can ask me questions anytime you wish. Or failing that, if you don't have a question at the time, if you think of something, put in the comments section, either on Facebook and YouTube. I will see them and I will reply to them next time I go live on air, which of course will be tomorrow, back in the studio. Anyway, on that note, if there is no questions, not to worry. Again, thank you for watching me today. I know, like I say, it's a change of scenery, but never mind. This show must go on, as I say. Till next time, don't forget, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and put up with me, not completely 100%, but still found this video useful, give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.